Well, I once tweeted, very famously, I said, I think Bitcoin is, going the way of online gambling. And I think Bitcoin's like $100 a coin then. Okay. And I was wrong, but I didn't need it. I was wrong. When I needed Bitcoin was $9,500, $10,000 a coin. And so I bought it at $10,000 instead of $100. People will buy it at 100,000. They will buy it at 1,000,000. They will probably buy it at 10 million.
The Bitcoin maximalist and the founder of MicroStrategy, Michael Saylor, is once again reminding people of why now is the time to buy and invest in Bitcoin. Michael Saylor's story with Bitcoin first started in August of 2020 when he purchased $250 million worth of Bitcoin, back when the Bitcoin price was around $10,000. Today, it is estimated that he owns $4.2 billion in Bitcoin with around 153,800 Bitcoins, which are under his company's control. And because of that, his company's stock saw a massive jump ever since he embarked upon his journey and started accumulating Bitcoin back in 2020. Even though the same company suffered a couple of decades ago when it had to pay $11 million in fines because it materially overstated its revenues and earnings after going public in 1998 according to the SEC. However, that issue now has been resolved a long time ago. But what does Michael Saylor expect for the future of Bitcoin? And what are some of the current risks and issues that he's foreseeing ahead? But before we continue answering these questions, make sure to subscribe to the channel if you haven't already. Now, Michael Saylor says that buying Bitcoin now is like buying an apartment in New York back in 1776. He made an analogy of the Bitcoin network being like New York but in cyberspace. It is the most reliable and most popular network out there amongst other cryptocurrencies, just like the way that New York is the financial center of the United States and even the whole world currently. But since people are moving more and more towards cyberspace and many business deals nowadays are taking place online, where startups, for example, can raise billions of dollars through virtual meetings, the need for a digital network instead of a physical one is only increasing. And that's where the Bitcoin network comes.
How much does it cost for an apartment in Manhattan? People pay $10 million for 4,000 square feet. $10 million, right? All of Manhattan was purchased for what, like $29 in beads or something. If you roll the clock back, some nothing. And so you can't really get caught up in what the unit price is. You have to ask the question, what is the dominant network in cyberspace? And Bitcoin is the dominant network. And the reason it's the dominant network is a bunch of things. One, all the smart money arrived there, right? If all the smart people that wanted a decentralized, non-sovereign store of value crypto network, if they all showed up, looked at 10,000 choices and picked this one and put all their money on it, right? That's like all the smart people, they showed up in America and they picked New York.
Michael Saylor also highlighted the fact that presidential candidates in the US are now also endorsing Bitcoin, which is a huge step towards broader adoption. We have Robert F. Kennedy, the Democratic candidate, saying that he himself has purchased 14 Bitcoins for his family members. Also on the Republican side, there's Ron DeSantis, who is promising to end what he calls Biden's war on Bitcoin and also tossing central bank digital currencies into the trash can.
I think that every presidential candidate is eventually going to endorse Bitcoin. We've already got Robert Kennedy on the Democratic side, and we've got Ron DeSantis on the Republican side endorsing Bitcoin. I think the support for Bitcoin amongst presidential candidates is unprecedented and it's going to grow.
Michael Saylor also made a few comments on the Bitcoin ETFs and the recent filings of the world's largest financial institutions who want to join the space. He said that many institutional investors prefer investing in such products like ETFs, for example, instead of buying and holding Bitcoin themselves due to some regulations and tax considerations. He also said that a spot Bitcoin ETF could allow trillions of dollars in institutional capital to be invested in Bitcoin, which will have a tremendous impact on its price. We have in Europe, for example, where we saw the first ever spot Bitcoin ETF that was launched very recently, and now also BlackRock and other huge financial institutions are waiting for the SEC's decision to approve or disapprove their spot Bitcoin ETF applications.
So if you step back and you look at this from the point of view of an indifferent investor or an indifferent industry watcher, the conclusion would be, it looks like a spot ETF probably will get approved. There's massive political pressure to approve one. The circumstances have changed, and now there's a way for the SEC to approve it without backtracking on its previous legal and policy guidance. Certainly there are a lot of Wall Street entities that have a vested interest in seeing this happen. If you're an institution, one way to get Bitcoin exposure is to buy the underlying asset, but there have been challenges with finding the right exchange to buy it on and the custody arrangement. And so a simpler way to do it is to buy the spot ETF. There are, to say there are trillions of dollars of capital that is required to invest in a security that trades in these compliant forums is understating the obvious. It's tens of trillions of dollars. So there's a lot of capital that can't buy the Bitcoin or self-custody the Bitcoin. They don't have the charter. Maybe it's against tax code. Maybe when they raised $10 billion from public investors, they raised it to invest in securities, but not invest in commodities or property. So the spot ETF availability is a major milestone for institutional adoption. The approval of a spot ETF is a major milestone in regulatory clarity, which is tantamount to an endorsement, right? The engagement of Fidelity, Citadel, and BlackRock and Schwab in this exercise is, I mean, Charles Schwab is literally synonymous with Wall Street, like 100 years of Wall Street. So what you have is Wall Street coming together to offer securities and exchange services and indirectly custody services for mainstream investors. And if we look out about 12 months, if I was saying, well, what are the key milestones to drive mainstream adoption of Bitcoin? Well, one of them clearly is a spot ETF.
Now, when it comes to the risks of holding and investing in Bitcoin and some of the potential issues that Michael Saylor talked about, he said that the risks are mainly tied to counterparty risks, meaning that the Bitcoin network and its concept are secure. However, some crypto exchanges, crypto wallets, as well as some people who want to make fundamental changes to the Bitcoin network itself are essentially the problem. If we take a look at the main reason why many Bitcoin and crypto investors lost millions of dollars in the last couple of years, it was mainly due to some fraudulent actions of some people who were taking advantage of the crypto hype. The biggest example was Terra Luna and its founder Duke Kwon, who scammed investors with billions of dollars, and which essentially was the main reason why Bitcoin fell from its all-time highs back in 2021. Then there was the problem with crypto exchanges like Celsius and recently FTX, where billions of dollars of crypto investors' money have been lost. Also, in addition to some incidents where people had their digital crypto wallets compromised and stolen, which essentially highlights the importance of holding crypto in cold storage on what is similar to a USB stick instead. Because as the saying goes, if it's not your keys, then it's not your coins. Here's what Michael Saylor said.
I guess I would say I worry about counterparties, right? We all worry about all the counterparties we deal with and who do you trust? And you should always, you get a hardware wallet, does it have a hole in it? When people send me a hardware wallet, they're like, this is just for you. I'm giving it to you for free. I'm like, oh, yeah, I'm not using this one, right? Right. So there are things to worry about, but they're common sense things to worry about as opposed to Bitcoin itself. The whole principle of Bitcoin is we've created an asset on a network to eliminate counterparty risk in the asset and counterparty risk in the network. When you actually own a commodity, you have counterparty risk to the other commodity manufacturers and the physical jurisdictions you custody the commodity in. And when you have a commodity, you can't self-custody, then you have counterparty risk to the custodian. And that gets your gold seized, or that gets your oil embargoed, or whatever. So Bitcoin is all about eliminating counterparty risk. So I think probably just don't F it up, right? Don't try to fix it, right? Don't try to fix Bitcoin like that. You wonder why the Bitcoin maxi is so hostile to people with their ideas. Like we just want to double the block size, or we want to change this rule or that rule. They're hostile to that because it's already perfect. And it's a bunch of imperfect people with a large ego that think that they can improve it and they want to basically F it up. So I would probably be a bit worried about that if there was any threat, but Bitcoin, I think, is stabilized. The protocol is stabilized. The community is very committed to the current conservative principles of Bitcoin. So I don't see that as a threat. I think now we're just in an expansion adoption stage.
So just like any other asset class, there are always risks and rewards of holding or investing in Bitcoin. But the fact that BlackRock and the other biggest financial institutions in the world want to join the space with their spot Bitcoin ETFs is a very huge milestone for Bitcoin. Especially also for baby boomers and those who want to invest in Bitcoin but they think that it is too much of a hassle or even too risky to buy it and hold it. But overall, in the next few months or so, if these Bitcoin ETFs get approved by the SEC, which is very likely, it will probably mark the beginning of the next bull run for Bitcoin, where millions can potentially be made. Exactly in the same way that many investors made millions of dollars during the previous market cycle that we saw a couple of years ago. So that was it for this video. If you enjoyed this one, make sure to leave a thumbs up and to subscribe to the channel. And with that being said, see you in the next one.